Texas Roadhouse, the premium casual steakhouse, 822 locations serving hand-cut steaks, fresh-baked bread, and made-from-scratch sides at a value price point that drives industry-leading traffic.
FY 2025 revenue $5.87 billion. Q1 2026 comparable sales up 7.1% with traffic up 4.5%. EPS 187 beat the 182 estimate.
Texas Roadhouse was founded in 1993 by Kent Taylor in Clarksville, Indiana, built on hand-cut steaks, made-from-scratch sides, and fresh-baked bread at prices that made a premium dining experience accessible.
The company went public on NASDAQ in 2004 and launched national expansion. The 2016 launch of Bubba's 33 began the multi-brand strategy, adding a sports bar format targeting a different customer and day part.
Founder Kent Taylor passed away in March 2021. Jerry Morgan, a 27-year Texas Roadhouse veteran whom Taylor had personally selected as his successor, became CEO, maintaining the people-first culture.
Texas Roadhouse generates 89% of revenue, 749 company-owned and franchise locations, delivering over $7 million in average annual unit volume per restaurant.
Bubba's 33 contributes 8% through 56 sports bar locations. Jaggers, a fast casual better burger concept, is in early expansion at 17 locations with 5 more planned for 2026.
FY 2025 revenue $5.87 billion, up 9.4%. Restaurant margin approximately 16.3%.
Q1 2026, comparable sales up 7.1%. Traffic up 4.5% and average check up 2.6%. EPS 187 beat estimates.
Darden Restaurants, Olive Garden, Longhorn Steakhouse is the primary casual dining peer. Texas Roadhouse consistently outperforms on traffic growth and customer value perception against the broader casual dining category.
Bloomin' Brands, Cracker Barrel, and Brinker International compete in value casual dining. Fast casual brands like Shake Shack and Five Guys compete for the value-minded consumer.
Texas Roadhouse's structural advantage is the value-quality combination, hand-cut steaks and scratch cooking at prices competitors can't match without compromising margins. The wait at the door is proof of demand.
Texas Roadhouse operates in 49 U.S. states with strong suburban and mid-sized city penetration. 822 total locations include 749 Texas Roadhouse and 56 Bubba's 33 units.
International presence spans 10 countries through a franchise model, primarily English-speaking markets and the Middle East.
Jerry Morgan has served as CEO of Texas Roadhouse since 2021, a 27-year company veteran who rose from managing partner to president before being personally selected by founder Kent Taylor as his successor.
Morgan holds a degree from Florida State University. He embodies the Texas Roadhouse culture that Taylor built. People first, operators in the dining room, scratch-made food at every location.
Texas Roadhouse, the premium casual steakhouse, $5.87 billion in FY 2025 revenue, with 822 restaurants delivering hand-cut steaks and fresh-baked bread at prices that keep customers coming back.
Q1 2026, comparable sales up 7.1% with traffic up 4.5%. EPS 187 beat the 182 estimate. Approximately 35 new restaurants planned for 2026. Texas Roadhouse's value proposition winning in casual dining.
The casual dining industry has been consolidating for 20 years. Chains that relied on generic menus, inconsistent service, and outdated ambiance have closed or contracted. Texas Roadhouse has done the opposite. It has expanded aggressively, maintained a value-for-money positioning that resonates across income levels, and delivered consistent same-store sales growth in nearly every quarter of the past decade. Q1 2026 was another chapter in that story.
Texas Roadhouse was founded in 1993 in Clarksville, Indiana, and is headquartered in Louisville, Kentucky. The company operates approximately 700 Texas Roadhouse locations across the United States and a smaller number internationally, along with roughly 100 Bubba's 33 locations, a sports bar concept. Texas Roadhouse is known for its generous portions, hand-cut steaks, fresh-baked bread, and family-friendly atmosphere, at price points that position it between fast casual and traditional full-service casual dining.
Revenue for Q1 2026 was $1.6 billion, a 9% increase year over year. Comparable restaurant sales grew at approximately 5%, with positive contributions from both traffic and menu pricing. The traffic growth component is particularly significant. It means guests are choosing Texas Roadhouse more often, not simply paying more for the same number of visits. That traffic share is being won from both fast food, as consumers trade up when they splurge, and from higher-priced casual dining, as consumers seek the same quality at a lower price point.
Earnings per share of $1.87 beat the consensus estimate of $1.80 by approximately 4%. The beat reflected better-than-expected labor productivity and commodity cost management. Beef prices, which represent the single largest input cost for Texas Roadhouse, were elevated in Q1 2026 relative to the prior year, but the company's commodity hedging program and menu pricing adjustments offset a significant portion of the inflation. Operating margin held flat year over year, which is a positive outcome given the input cost environment.
The new restaurant development program is the primary long-term growth driver. Texas Roadhouse has been opening 25 to 30 new Texas Roadhouse locations annually for the past 5 years, with each new restaurant generating average unit volumes of over $6 million. The unit economics, payback period under 3 years at current AUVs, make the expansion program highly capital efficient. The company selects sites in suburban and secondary markets where the value proposition is strongest and competition from upscale casual dining is least intense.
CEO Jerry Morgan took over from the legendary Kent Taylor in 2022, following Taylor's passing. Morgan had been with the company for over 2 decades and was deeply embedded in the operational culture that Taylor built. The emphasis on from-scratch cooking, in-restaurant staff training, and the experience of the weekly managers meeting as a cultural institution. The transition has been seamless from an operational standpoint, and Morgan has maintained the expansion pace and operating standards that drove the stock's multi-decade outperformance.
The Roadhouse Rewards loyalty program is a relatively recent addition to the Texas Roadhouse toolkit and is worth watching. As of Q1 2026, the program has enrolled over 15 million members, and enrolled members visit more frequently and have higher average checks than non-members. Digital ordering, both online and through the app, is growing as a percentage of total sales, which has 2 structural benefits. It reduces wait time friction, and it captures data on customer behavior that can inform menu and marketing decisions.
The commodity risk for Texas Roadhouse is concentrated in beef. The company purchases approximately $500 million of beef annually, a scale that gives it purchasing leverage but also concentrates the P&L exposure to cattle cycle dynamics. Drought conditions in major cattle-producing regions, packing plant disruptions, and export demand from international markets all influence domestic beef prices. Management has extended its commodity hedging program to cover a larger proportion of purchases further forward, which reduces volatility but also limits downside participation when prices fall.
Labor is the second major cost lever. Texas Roadhouse employs approximately 100,000 people across its locations, predominantly in kitchen and service roles. The restaurant labor market remains tight in most markets. Unemployment in food service is below national averages, and competitive wage pressures from fast food chains that have raised minimum wages are affecting casual dining labor costs. Texas Roadhouse has responded by investing in scheduling technology and reducing manager overtime rather than simply absorbing the cost.
The valuation at roughly 20 to 22 times forward earnings is at a modest premium to fast food peers like Darden Restaurants, but well below growth restaurant companies with faster unit expansion. For a company growing EPS at 12 to 15% annually with predictable cash flows and a development pipeline that provides visibility, the multiple is defensible. The dividend yield of approximately 1.5% provides income, while the buyback program reduces share count by approximately 1 to 2% annually.
Texas Roadhouse has a simple competitive advantage. It executes better than anyone else in its price tier on food quality, service speed, and atmosphere. That execution is not glamorous, and it does not lend itself to exciting strategic narratives, but it has produced a stock that has significantly outperformed the restaurant sector and the broader market over the past decade. Q1 2026 continued that track record. Beef cost management is the most operationally complex challenge at Texas Roadhouse, and the primary reason management spends more time on commodity procurement than almost any other operational topic. The company purchases approximately 400 million pounds of beef annually, roughly 70% of its total food cost, and uses a combination of short-term contracts, futures hedging, and relationship-based sourcing from regional packers to manage price volatility. In Q1 2026, beef costs increased approximately 8% year over year due to persistent herd liquidation that began in 2023 and will take until at least 2027 to fully rebuild domestic cattle inventory. Texas Roadhouse manages this through menu price increases, portion optimization, and format expansion into lower beef intensity concepts like Bubba's 33.
Roadhouse Rewards, the company's loyalty program, has been the most important digital investment at Texas Roadhouse over the past 3 years. The program now has over 20 million enrolled members who generate approximately 45% of total U.S. system sales. The data from Roadhouse Rewards allows Texas Roadhouse to target lapsed guests with precision offers, a capability the company did not have 5 years ago, and to identify geographic markets where new unit openings are most likely to perform above average based on member density and visit frequency patterns. The loyalty program is also the distribution mechanism for the company's off-premise business, which grew to approximately 18% of system sales in Q1 2026.
Jerry Morgan's approach to unit economics discipline distinguishes Texas Roadhouse from the growth at any cost mentality that has historically damaged casual dining chains. The company opens between 30 and 40 new restaurants per year, a pace that it has maintained consistently for over a decade, and targets average unit volumes of $6 to $7 million for new openings within the first 18 months of operation. Sites that do not meet that threshold within 24 months are reviewed for closure or repositioning. That discipline explains why Texas Roadhouse has average unit volumes of approximately $7.6 million, among the highest in full-service casual dining, versus competitors who chase expansion at the expense of per-unit economics.
The long-term unit expansion opportunity at Texas Roadhouse is larger than most investors model. The company currently operates approximately 660 locations domestically, with a stated white space of approximately 1,000 total U.S. units at full build-out. International is a smaller but growing component, approximately 30 locations as of Q1, with franchise agreements in place for Canada, the Middle East, and Southeast Asia. The international franchise model is asset-light for Texas Roadhouse, as it earns royalty fees of approximately 5% of net sales without capital investment in the physical locations. If international penetration follows the domestic trajectory over a decade, the royalty stream alone could add a meaningful recurring revenue component to the P&L. As always on Charged Alpha, everything you have heard is financial education and analysis, not personalized investment advice. Past performance is not a guarantee of future results. Do your own research, know your own risk tolerance, and consult a financial professional before making any investment decisions.
Ooh-wee-doo! That ticker tape starts dancing fast. A bull market thrill that's built to last. Dividends are ringing up the swing. Listen to that sweet ka-ching. It's a Wall Street swing. That fast-paced rhythm makes you sing. Yeah, the Wall Street swing.